Buy-to-let is not without risk. So you have to consider the fact that if you're getting a buy-to-let property, you're usually going to have to pay down around 25% deposit. Whereas with a residential mortgage, sometimes you can get away with a 5% deposit, and there are even lenders that will lend up to 99%. With a buy-to-let, in most cases, you're going to need to pay down a 25% deposit. Some lenders will even request more than 25%. Keep in mind, everything that I'm talking about today is the general rule. You will find that there are always lenders that work around the edges. But just as a general rule of thumb, if you're considering getting into investment property and you need a buy-to-let mortgage, think about that 25% mark. Also consider what your situation is, and remember that you should be going into this as an informed consumer. What you don't want to do is go into this because you saw some guy on YouTube or some guy on TikTok that's saying that this is a quick way to make money. You want to make sure that you remember you may get the property and you may not be able to find someone to rent it. The bank does not lend to you contingent upon it being rented, whether it's rented or not rented. You need to keep in mind that you need to pay your mortgage every month. There may be tax implications. So having that buy-to-let property may have some tax implications. And you also want to make sure that you speak to an estate planner, that you can situate your property and your finances in the right way. I mentioned a little bit about deposits. So for a buy-to-let mortgage, you're typically going to need a 25% of the purchase price.